Welcome back. So we were digging around the AI Agent Store website again, looking for some of the more specialized tools out there.
hmm
And today we found one that seems pretty critical for anyone in quantitative finance. It's called StockAgent.
Yeah, and I think what we should do is just quickly get a real handle on what this system is, what it actually does.
Right.
Because it's not just another backtesting tool. This multi-agent approach, it feels like a fundamental shift in how you can approach trading simulation.
Okay, let's unpack this.
Yeah.
So at its simplest, StockAgent is a multi-agent system. It uses large language models to simulate how investors trade inside a controlled market environment.
What's fascinating here is that it's not just one model making decisions. It allows researchers to set up, multiple completely distinct LLM agents.
Oh, interesting. So you could have one act like a cautious institutional investor?
Exactly. And another could be, say, a momentum-chasing retail trader. You basically watch their conflicting strategies create these emergent market dynamics, all in response to outside information.
So we're talking about studying how things like big economic shifts or new policies actually influence trading decisions, but in a sandbox.
Right. A controlled one.
But, I mean, how does an LLM system really capture the irrationality of a real market? Panic selling, FOMO, all that stuff.
That's the key question. And that's where its simulation rules and the way it integrates real-world data comes in. But just as important, this structure solves a huge technical problem,
Which is?
something called test set leakage.
Okay. And just to be clear, for everyone, that's when a model accidentally gets trained on the data it's supposed to be tested on, so it looks smarter than it is. It's basically cheating.
It's totally cheating. It undermines the whole result. StockAgent gets around that by creating genuinely new simulated events, things the LLMs couldn't possibly have memorized.
So it's a huge win for reproducible research.
A massive win.
Which means it's really built for a specific kind of user. We're talking quant researchers, data scientists, academic labs.
Exactly. It's for building and testing prototypes.
Yeah.
So a researcher could, for instance, simulate a sudden interest rate hike and just watch how their value investing agents react versus their high-frequency agents.
And measure the exact impact on profits and liquidity.
In a totally controlled way, yes.
I saw in the tech specs that its autonomy level is listed at 55%. That feels very specific.
It is specific. That other 45% is the human-in-the-loop part. It's the fixed rules of the market, the data feeds, the constraints on what the agents can do.
So it keeps the simulation grounded.
It keeps it grounded in sound economic principles, while the LLM handles all the behavioral quirks.
And we have to stress this point. This is a research tool. It is absolutely not a live trading bot.
Correct. Do not connect this to real money. It's for building models and testing theories without risking a single dollar.
It's a tool for studying human-like market reactions.
And that kind of brings up a bigger question, doesn't it? Well, if we can successfully benchmark LLMs reacting to these simulated market shocks, what does that tell us about how predictable human reactions are to sudden real-world events?
That is a very compelling thought to end on. If you want to explore more agents like this one, be sure to visit AIAgentStore.ai. Thanks for listening, and we always appreciate you rating the show.